Hello everyone, welcome to my YouTube channel Learn CMA with Pavitra. Today I'll solve the second problem. Before that, let's read the problem which is given. From the following particulars presented by Sri Tirlankar for the year ended 31st March 2013, prepare profit and loss account. Gross profit 1 lakh, rent 22,000, salaries 10,000, commission in bracket credit 12,000, insurance 8,000, interest in bracket credit 6,000, bad debts 2,000, provision for bad debts 1/4/2012 4,000, sundry debtors 40,000, discount received 2,000, plant and machinery 80,000. In this problem, it is already given gross profit. So, there is no requirement of preparing trading account, and also it is given only indirect expenses. We need to remember that while preparing trading account, we consider all the direct expenses, and while preparing P&L account, we consider all the indirect expenses. Here we can notice that they have given only indirect expenses, and also in the heading they have mentioned to prepare profit and loss account. So we are going to prepare only profit and loss account. We can notice here next to commission and next to interest in bracket they have mentioned credit. What is the meaning of that? It is nothing but commission received and interest received. It is the income for the business, so it is written on the credit side of the profit and loss account. We can notice there old bad debts and old provision for bad debts they have given. So related information to this might have given in the adjustment. Before that we'll read the adjustment. Later we can do the necessary calculation required for this. So let's read the adjustments. First one, outstanding salaries amounted to 4,000. So it is outstanding expenses. Outstanding expenses should be added to the respective expenses. What is the meaning of outstanding expenses? It is nothing but the company has taken the benefit but the related payment has not been made. This 4,000 amount should be added to salaries. Second one, rent paid for 11 months. We all know in a year there are 12 months, but here they have clearly stated that we have paid only for 11 months. So what is the amount we have paid? They have given in the particulars information rent amount rupees 22,000. Let's do the calculation for 12 months now. So for 11 months it is 22,000. For 12 months what is the amount we need to calculate? Let's do the calculation now. 12 into 22,000 divided by 11. The amount is 24,000. And we have to deduct this 22,000 from 24,000. Difference amount is 2,000. This is outstanding rent. This 2,000 should be added to the rent in the P&L account. Next, third one, interest due but not received amount to 2,000. The interest amount of 2,000 we were supposed to receive but not yet received. So this is outstanding income, should be added to the respective income on the credit side of P&L account. Next, fourth one, prepaid insurance amounted to 2,000. So here they have given insurance amount 8,000. Out of 8,000 we have already paid 2,000. So prepaid expenses should be deducted from the concerned expenses. Why? What is the meaning of prepaid expenses? Future expenses that are paid in advance is called as prepaid expenses. Next, depreciate plant and machinery by 10% per annum. They have given the value of plant and machinery 80,000. Let's do the calculation. Value of the plant and machinery is 80,000. On that we have to calculate the depreciation at the rate 10%. 80,000 into 10 divided by 100, it is 8,000. So this 8,000 depreciation amount should be debited to the profit and loss account. Next we have further bad debts amounted to 2,000 and make a provision for bad debts at 5% on sundry debtors. So before going to this particular adjustment, we should understand certain information. Let's see that. We can notice here in this problem old bad debts, old provision for bad debts, and new bad debts and new provision is given. Okay, and they have given all the four information. How we need to calculate that? Let's see once. When old provision and bad debts are given in trial balance, new provision for bad and doubtful debt is given in adjustments. Let's see. In this problem exactly they have given old provision and old bad debts in the trial balance, and new provision at the rate they have given in the adjustment. So old bad debts and new provision higher than the old provision, then the difference amount is debited to P&L account. In the balance sheet only new provisions are deducted from debtors, or else if the old provision is higher than the total of old bad debts and new provision, then the difference amount is credited to P&L account, and in the balance sheet only new provisions are deducted from debtors. So for this purpose all the calculations we need to do. Let's write down the information whatever they have given. Old bad debts 2000, old provision 4000 they have given in the particulars. New bad debts or further bad debts they have given in the adjustment 2000. New provision they have asked us to prepare at the rate 5% on the sundry debtors. So sundry debtors amount is 40,000. Let's do the calculation of new provision. Sundry debtors amount is 40,000. From that we need to calculate new bad debts before calculating new provision. New bad debts is given in the adjustment, so we have to deduct it. New bad debts amount is 2000. So the difference amount is 38,000. So on this 38,000 we have to calculate at the rate of 5%. It is 1900. We have got the answer here. New provision at 5% is 1900. Okay, so now we have got all the information. Let's see the treatment for new provision for bad and doubtful debts. If the total of old bad debts and new provision, let's write it down. Old bad debts, new provision. Old bad debts amount is 2000 and new provision amount is 1900. The total is 3900. What they have said here? If the total of old bad debts and new provision higher than the old provision. Let's see old provision amount. We should see which amount is higher here. In these two old provision is higher. So if the total of old bad debts and new provision higher than the old provision, then the difference amount is debited to P&L account. But here old provision amount is higher than the total of old bad debts and new provision. So let's see the second treatment. If the old provision is higher than the total of old bad debts and new provision, here we can see old provision amount is higher than the old bad debts and new provision. Then what we have to do? Then the difference amount is credited to P&L account. So this difference we should see 4000 minus 3900. The difference is 100. This 100 should be credited to P&L account. The second B, whatever they have given, this we will ignore because we are preparing only profit and loss account. And the last adjustment is commissions received in advance amounted to 2000. Income we have received in advance, so it should be deducted from the concerned income. Commission amount they have given here is 12,000. This out of this 12,000 we need to deduct 2,000 because we have already received 2,000. Everything is clear related to this problem, and the format is also important. Now let's solving the problem. First information they have given is gross profit. Let's write on the credit side. Amount is rupees 1 lakh. Next rent they have given. Rent is expenses, so it will be on the debit side. Rent. What is the amount? 22,000. For this we need to pass adjustment. So I am writing on the inner column. add outstanding rent amount is, we have done the calculation already. I'll show you once. So 2000 is the outstanding rent. The total amount will be 22,000. To salaries is 10,000. For this also we can notice there is an adjustment. Salary outstanding 2,000. The total will be 14,000. Interest due but not received by commission amount is rupees 12,000. There is an adjustment we can notice there. The last one, commissions received in advance. The amount is rupees 2,000. The balance will be 10,000. Insurance 8,000. Also there is an adjustment. Prepaid insurance that should be deducted from insurance 1,000. So the balance amount is 6,000. Next we have interest credit balance rupees 6,000, and also there is an adjustment. Interest due but not received amounted to rupees 2,000. Outstanding income amount is 2,000. The balance amount is 8,000 on the outer column. Next we have discount received amount is 2,000, and we have one more expenses, that is depreciation. So depreciation on plant and machinery. This amount we have already calculated. That amount we can directly write it here. The depreciation amount is 8,000 on the outer column. 8,000. Next, only one information I have left that we will solve now. That is related to bad debts. This calculation also we have already done. So we have got the answer. So here we can see a total of old bad debts and new provision is 3,900, which is lesser than the old provision. When the old provision is higher than the total of these two, we should credit the difference amount to the P&L account. Okay, this 100 rupees should be credited to P&L account. On the outer column, 100 rupees, the difference amount, we should write it here. And also the further bad debts, whatever they have given, that will be debited to P&L account. 2,000. So now let's see the total, which whether the debit side is higher or credit side is higher. Let's see. So the credit side amount is higher than the debit side. So both the side we should write the highest amount. So the difference amount is 66,100 because the credit side amount is higher than the debit side. Credit side we will write all the income and the debit side we will write all the expenses. Income is more than the expenses, so it is profit for the business. So this net profit will be transferred to balance sheet. In this problem they have asked us to prepare only profit and loss account, so we have got the answer. Thank you for watching my video. If you like the video, please like, share and subscribe. Thank you once again.